All right, so the stock market has been in the headlines these last several months, going up, going down drastically from time to time. It's like one big roller coaster.
This is a headache just trying to watch it. Here to talk about what could be another good option is senior financial planner Les Szarak from Szarak Financial. Yeah, it's amazing. The market's up 400 today, down 350 tomorrow, back up again. How do you do your job? This is crazy.
It's interesting. This is what makes the job interesting. It's kind of like watching the calf season this year.
Oh, yes.
I mean, I'm still high on last night's game. I didn't see that one coming, that kind of blowout. But
yeah,
I mean, the market is going from 14 months of extreme no volatility whatsoever to now I think it's playing catch up. And so a lot of people are getting nervous right now. We're already looking at our market being kind of pricey right now. So the question always is, okay, so what's my alternative though? The easy decision right now would be to say, you know what, stocks have had a tremendous run. Let's take some of the profits off the table. The hard part is where do we put it? Bonds right now look a little bit iffy right now with interest rates going up. So one of the suggestions, one of the things that we've been looking at is international stocks, and not limiting your choices of companies to U.S., but also looking overseas.
Can that be risky? I mean, I think some people may be a little hesitant to think that way, international stocks.
That's a great point. I mean, psychologically, we have what's called our home field bias. We like we feel more comfortable buying stuff, and that we know, the names, for example.
And then it's regulated the same way. We want to make sure things are regulated, that we know where they are in our country.
So here's the interesting point, though, Steph, is that we have no problem buying foreign stuff. We buy foreign wines, clothes, shoes. We have no problem doing that, and so that drives the profits of those companies. Yet we're hesitant to actually invest in those companies. So kind of my talk today is like, don't limit yourself to our boundaries, if you will, in terms of stocks. The interesting thing about the foreign markets is that they're about probably arguably a year or two behind us in the recovery. When we hit the Great Recession in 2008, our Federal Reserve here slashed interest rates and started printing money like crazy. Now, whether or not that was a good idea or not, we'll see with time. I mean, there's a price to pay for that with inflation down the road, but it certainly did help us out of our recession. Europe didn't start printing money for well over a year and a half after we did. So theoretically, they're behind us in the recovery. We've seen some tremendous growth, especially in Europe, in their economy. So we think that there's kind of an opportunity here to invest in those companies that have a little bit more upside potential that we see in the U.S. market. Because we are getting mature.
We were talking about off camera, you were saying if you could go back 2 years ago and invest in the U.S. market, would you do that? Yeah,
heck yeah.
That's kind of the same thing, because we follow the headlines here all the time. The trade war with China, which President Trump has won. They've backed down and really pulled back on a lot of things. A couple years ago, Greece, Spain, on the edge, on the verge of bankruptcy, they're all bouncing back. Now's the time to really look at your expert and ask some tough questions and say, is now the time to perhaps invest internationally?
And also broaden out your diversification. Back to your point, Steph, about risk. If you look at all the research, there's actually less risk if you diversify overseas than if you just bought 100% in U.S. stocks. So if you blended in 15, 20% international stocks, you're actually decreasing the volatility if you look at it historically. So that's one of the ways you can actually kind of have your cake and eat it too, in one sense that you're diversifying it, you're getting additional growth, but you're also decreasing some of the volatility potential.
So that's another reason why you need the experts, because I would have said you completely different. Hide your money under your mattress.
Is there a scale, like, if you want to do something internationally, maybe take 10% of what you have and just kind of tap your toe in the water? Is there a scale at all that you generally recommend?
It really depends, but if of the stock portion of your portfolio, probably having 20-25% in there is not excessive.
Not a bad thing.
Yeah, not a bad thing at all.
So much to discuss.
And then there's gold, but we're out of time.
Oh,
so
no,
I'm so
not
sorry.
again. Gold is great, right?
Absolutely. Don't forget, next week we got our economic updates coming up. So again, I'm going to invite you guys if you'd like to come. And all of our viewers, you're more than welcome to come. It's next week, Thursday. 1 at noon and 1 at 6.
Thursday. All right. So information, people can find out more by going to fox8.com. Hopefully we'll have the information for you. Call your office.
Good call. Call the experts here at Szarak Financial Services. Again, all that information on our website, fox8.com.
He'll guide you down the path
to riches,
yes.
wealth, and a happy life.
Thank you so much, Les. We'll see you soon.